The TTF front month is moving, and today in our special report we will have a look at where we might go in the very near term and what happens beyond that. My name is Marcello Kolax. I am the managing director at Clever Markets. We are your remote technical analysis desk for hire. And this morning I was going through the charts and I thought this kind of like special video is definitely needed to help everyone out there who's wondering what might be happening next. Okay, so what follows is just my personal assessment, of course, in line with the Clever Markets methodology. But overall, these are just some very good guesses because remember, with technical analysis, we are not trying to predict the future. We are just preparing ourselves for any eventuality, right? Okay, so on the daily chart, I want to zoom out on the TTF daily chart. We see that yes, we are within this descending channel and we are bearish within that. So for now, this here is just a correction. So it is one of those essentially, even though of course, this correction here is way more pronounced and we are making our way to the upper end of the channel, which is near 28.73. Okay, so now, yesterday on Wednesday, we closed the market with a candle pattern called a bearish engulfing, which usually leads to some more losses. And it was also confirmed with the stochastic indicator. You can see like the orange line is crossing below that dotted line and then also below 80. So the oscillator is called stochastic and it is one of these like overbought, oversold indicators. And we did get a very firm bearish signal here. Then combined with this bearish engulfing, this is kind of the confirmation. So the first thing I do is now I'm trying to assess how low we can go. So I'm drawing in some FIB retracement levels. And I did this by going from the very bottom to the very top. And now I kind of know that anything above the 23.6% FIB would be considered noise and there's a chance for the market to move higher. Clearly didn't happen, so we moved below that. You can see we even closed below the 38.2% FIB. So that means now we are working with a more extensive correction. And these deeper corrections can usually go to the 61.8% FIB. And that's where I'm marking out my initial target as well, which right now is the 24.76. Okay. Is there any other evidence that suggests that this might be a good support level? Well, yeah, I'm glad you asked. On the 15-minute chart, I have been working with a few things. So I've been working with this trend line that goes back to the 23rd of February. And you can see this is a very good trend line, so it did hold 3 times for now. So that isn't too bad. It means it is an important level to watch out for. Then also, yesterday on Wednesday, we did have this double top forming, which means we have one peak, a little bit of a retracement, and another peak and a retracement. So this line here is called the neckline, which is the lowest part of this formation, right? It's the trough in the middle. And these two are the peaks or the double tops, essentially. And the break below the neckline, the confirmed break below the neckline, now activates a target that is the width of the double top, and this length is then simply applied. So for this, I'm just using the FIB projections right now, highest point, lowest point, and that gives us 100% or just a one-time extension right from here to there at 24, what is this, 5.5. So now we have an intraday target at 24.55 and we have a daily target at 24.76. So kind of these two targets confirm each other. So that's why I'm so convinced that we will move towards this level. Because we have targets from 2 different time frames aligning, which means there's 2 classes of traders who are all looking at different things, but all come to the same conclusion that we should move to here, to this level. Sounds good for now, right? But here's the thing, we always need to wait for confirmation. So some traders So this is a 2 candle pattern which still needs confirmation in form of a third red candle, and also the double top needs confirmation with a break below the trend line, because the trend line is really important. So that means on Thursday I want to see a break below 25.75 on the trend line, which would then give us the earliest downside, or reconfirm the downside target here, yeah. And that would also possibly lead to our other red candle, and then we could see the market decline all the way here. What happens after this? Well, for this we can't look at the 15 or even hourly chart because it's too far out, but we can look at the daily chart. And what I see here is dangerous. So I see that the MACD has been moving higher. You can see that. Let me zoom out. So the MACD is a momentum tool, yeah. And we can see that we have bottomed out and we have been moving higher. So that means that even though we had the downtrend here, we could see that the bears are running out of steam. And we could also see that I like to work with the 8 and 12 exponential moving average crossover as a signal, but that's just a preference, a personal preference. And we see we get a bullish signal here as well. So what does that mean? So combining these two, a bullish momentum tool and a bullish EMA, and also let me bear with me here for 1 second. So I have to put on the DMI for a little bit. It takes a second. I like to use the directional movement index. It's a very good tool, but putting it on here is a little bit cumbersome. So it does take a little bit of time. DMI minus and the DMI plus here. Let's put these two on. Usually they are on their own little box down here. Yeah. There you go. So essentially, I like this because it shows us who's winning out, the bulls or the bears. So we have like a red line showing how the bears are making advancements. We have the green line looking how the bulls are making advancements. So you can see that for now, the bulls are winning out. That looks kind of bullish to me, right? So I feel almost as if we would have a small retracement bounce at the 61.8, and the small retracement is confirmed by the bearish engulfing and the stochastic. But then we might bounce because it's a target on 2 time frames, and we could re-attack the channel border because the MACD and various trend momentum sentiment tools, they're all pointing towards more gains. So that's why this here for now is the preferred trajectory. And here's the thing, once we are at this level, we need to reassess what is happening with the market, if we see any more like bearish confirmation candles, or if we would simply break higher and start making higher highs and higher lows, because then we would turn the near-term downtrend from bearish within the channel to bullish. And so how can we trade this? So there's a difference between analyzing and trading, right? So now we have analyzed the market. So I think any sort of like short selling opportunities are rather short-lived and are best conducted on the intraday charts. This could be the 15 minutes or maybe the hourly chart, yeah. So it looks like this seems to be like the better way, or the more secure way to maybe make use of this tiny leg. There might be some traders who are a little bit more adventurous and who are happy with going short past the neckline, and there's others who might want to wait for the trend line break. But once again, it is always a trade-off between accuracy and timeliness. So do you want to be fast, or do I want to be early? If you want to be early, then there might be some traders who put their stops just above the neckline at 26.64. Because what can sometimes happen, and we kind of see it here a little bit as well, there might be a little bit of an uptick before we continue. There might be even like a tiny like touch here that could happen before we move lower again. Overall, yeah, I am bearish intraday simply because trend, momentum, volume, even like the oscillators, high volume, everything is pointing towards more losses. But we did end the session with a hammer and a is stochastic. So there might be just the tiniest green candle here, right? So that's why I'm doing this for now. Yeah, something like this. Okay, then for the daily, I would kind of want to see what happens. So this is something tradable on the intraday because now we are from 26 to 24. Yeah, €2 that we can move here. But then on the daily chart, I wonder if we break. So we are still bearish, but my personal trading preference, how I like to do things is I close out the shorts if we break above the channel. But it's not a signal for me to go bullish. I'm just neutral. But I would be bullish if we then actually make it above the 28.73, because then we would have guaranteed a flow of higher highs and higher lows, right? The lows are getting higher and the highs are getting higher. So that's how we can trade this. By the way, if we actually do break below the 61.8% fib and below the target, yeah, then we could make it very easily to the low here, 22.32, and then the bears would be back in charge below that level. So can you see, no predictions here. We're just taking it like one swing at the time. And if we break below this level, then we would know, okay, we are wrong. We need to reassess the situation. Then we could make it all the way to down here. But if we get some sort of bullish reversal candle and maybe some bullish stochastic, then yeah, probably some room. Okay, so this is all. This was a fairly long video, but I think it was absolutely necessary. Everyone stay safe out there. If you want to get in touch with me, then just connect with me on LinkedIn. My name is Marcello Kolax still. And yeah, follow me if you are interested in bringing these sort of capabilities in-house. Then go to clevermarkets.com and book a meeting with me. All right, see you around. Bye-bye.